Good morning, everybody. Mike Vacchi, Princetontrader, here with your Friday morning pre-market webcast. Okay, so we'll start on the hourly chart and we'll talk about the daily. If you didn't catch the evening webcast last night, I would encourage you to check it out. It's a little longer than usual, but I'm able to go through stuff in more detail than I can typically do because I try to keep these morning ones to, like 3-4 minutes, get people in and out. Talked a lot about the techniques that we used in the room yesterday. And there'll be a lot more where that came from. We did another video last night called Trade of the Day, which I really want to use as a teaching tool and as a reference tool for people to see how we do things and how we find trades, good, bad, and otherwise. It's a fantastic teaching tool for trades that don't work out because minimizing your losers is just as important as taking profits on your winning trades. Okay, so what we've got here, you've got this low here at 24, 23.75. You've had a couple moves back to the 24 area, 25. Basically, in the overnight session, we've been playing the channel between 25 and 32. So I was long 25, a short 32. I was asleep, so I missed this one because you have to sleep sometime. And now we're back up into 32. So you've had a lot of really nice moves inside of, like, say, a 7-handle channel. And how this resolves is going to have everything to do with how it goes today. So in the bigger picture, you've got this. You've got the big down day. So we talked about whether or not the bulls were going to be able to convert the daily mid-band. We were in a mid-band battle. The bears most definitely won that with another, big old red day down. What's going to be interesting is to see if they can follow through a little better than they did after this big red day down. So we are back in another band ride. Bollinger Bandwidth is still pretty tight at 2.54. What we would look to see, you can see that the gray line here is the third standard deviation lower band. The yellow line represents the second standard deviation lower band. 2 standard deviations, 3 standard deviations. What typically happens when you re-engage a band ride like this is that you spend a day or two in what I call the channel. The channel is the space between second standard deviation lower band and third standard deviation lower band. You can see that the second standard deviation lower band, which right now is in the area about 32, has marked the top of this channel. If that continues to happen as we get into the regular session, it opens the door for the bears to try to push this down to the third standard deviation lower band, which basically the area of this yellow line here, which is the 100-day exponential moving average. If the bulls show up for work today and they can convert the second standard deviation lower band to support, then the natural target there would be the 50-day exponential moving average up at 44. Now, it is summer. It is Friday. So you always have to say, look, the market's tired. It may not go anywhere. So, hey guys, the market's tired and it may not go anywhere. I mean, that's always on the table on a summer Friday. And to be very honest with you, as we get into the afternoon, I'm probably going to go do something else. I mean, we had a fantastic day yesterday. We're sitting at about 60 handles on the week. That's about what we did last week. Last week we did about 70, 75. So, I'm going to enjoy what there is left of summer. I'll take these little 3-hour, 4-hour vacations on a Friday afternoon. And if you're having a good week and you want to enjoy your family or do whatever or make it a 3-day weekend, you should absolutely do that. That's one of the advantages to doing what we do. So keep an eye on those 2 levels: second standard deviation lower band, third standard deviation lower band. Keep an eye on that channel and see if the bears can continue to progress. Now, the bears have got to hold 44. You cannot do a V back and hold, and end up closing somewhere, in the area of 46, 47, 50. If that happens, they set themselves up for a retest of the mid-band very early next week. So be on the lookout for that if they start to lose ground. If they convert 34, then I'll be the first person in there long, risking a few handles to see if they want to go ahead and do a squeeze. There already are bear market type rallies, okay? We're in a sell rallies environment. What we had here was basically a 4-day rally sell that could not get over the daily midband. And that's where you start to look for rally sells. That's why when it was struggling at 74 and 68, we kept taking our shots short. And because until they could convert this area, the bears had the advantage below 68. The bulls had the advantage above. Bulls blew it. Now we're down here. They have to fight back. All right, everybody have a great day. Have a great weekend. If I don't talk to you, there'll be a midday update today, and I'll talk to you then. Trade them well. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.